What should you do post Adani FPO? A lot of investors are a bit confused. They're not clear whether they should be investing now in the markets, whether they can expect the markets to sustain. Everybody is now not clear which way the market sentiment will go. Predicting sentiment is actually the most difficult thing. Nobody knows what event can transpire and change sentiment. Events like a war, events like a sharp change in oil prices have always shook up the stock markets. There are other events also which have the capability to shake up the stock market. So predicting stock market sentiment is something which never really works. So what can we do as investors in such a situation? One thing is certain, if valuations moderate, the investment case in many companies becomes stronger for us. We should invest actively and aggressively in those companies where we feel that the investment case will become stronger when valuations soften or moderate. Identifying such companies and waiting for valuations to come into the zone where we really find them attractive should be our topmost priority. Keeping some powder dry, keeping liquidity ready to invest in those companies should be the next priority. Knowing what to sell if the markets rally, prioritizing ideas which you don't like is the third priority. If you know what to sell, then you will take advantage of the time when it gives you an opportunity to sell. And that money can in turn be taken into some other ideas which you are more convinced to own and buy. The coming months will give us multiple opportunities to invest in companies which we always liked and could not invest in only because we didn't like the valuations. The valuations of companies are likely to moderate and come into our zone of comfort. This recent stock market event concerning the Adani Group is most likely to trigger a more moderate approach in the Indian stock market towards valuations. Companies will be more moderately viewed by analysts, investors and fund managers alike. The fear that if they don't buy a good company, they would not get it again as somebody else would buy it will gradually recede. That sense of anxiety to invest is certain to subside, and investors will take a more lenient, rehearsed and gradual view of things. Once anxiety comes down, then valuations will follow. So you will see that the way people view businesses from here will be very different from the way they viewed businesses, let's say in December or November. What we think is a reasonable valuation to invest in will now become a lower valuation than what it was last year. So that moderation in our approach will lead to a moderation in valuations, will lead to a more softer approach towards investing, will make investors more patient in the way they build their investment positions and see a saner market. So the event is almost behind us, but we are going to see a lot of difference in the way we see markets in the days ahead. Preparing ourselves for the new valuation paradigm is going to be our top priority right now. And as we prepare ourselves for a softer valuation paradigm, we must also moderate the pace at which we build our investment positions, be more gradual in the way in which we build our portfolios, and be tighter in what we pay even for the best of businesses. This event involving the Adani Group is a valuation reset even for investors who never invested in their group companies. For all of us, that is the key takeaway from the recent event. Thank you for watching this video.